The first thing I look at for this quarter was I was really surprised to see cash was in a reasonably strong position where one might have expected it was at the end of Q3 with the combined two companies. But the cash flow burn of nearly $1 billion, the worst Tesla has ever suffered.
Well, I really don't think it's so much of a concern because they are in the capital investment mode because they're still ramping up the production of the Model 3, going to be building more gigafactories and ramping up the production of the solar shingles. So, I mean, this is a capital investment story. If you believe in the story, you want to see them invest capital into the company.
Right, but if you've got, I mean, I'm not good at math, but if they've got $3 billion and they burn through $1 billion a quarter, this isn't a pretty story a year from now unless they sell more stock or borrow more money or do something to weaken their balance sheet or dilute the shareholders.
Well, they're probably going to go back to the capital markets again sometime between the spring and the summer, as they have for the past 2 years, because manufacturing cars is a very capital-intensive business, and this is a company that's in its investment and build-out stage. They're ramping up the production of the next model, the Model 3. They're still building out their dealer network, even though that's not that capital-intensive, and they're ramping up the production of the new solar shingles.
Yeah, as you mentioned. Michael Wolf, talk to me about what you see in this quarter for Tesla.
Well, a couple questions are going to be, first of all, how well have they integrated SolarCity, and what are the benefits going to come from the integration with SolarCity? Are they going to get out costs? Are they going to be able to sell more of the shingles? And then the second thing is some of the other services that they're talking about, whether it's ride sharing or autopilot, how quickly are those going to roll out? I mean, that is part of what people are looking for, is not just the equipment of moving the metal, but also other services that are going to be internet-based and technology-based.
Ivan, what's the biggest risk you think to the stock here? I mean, it certainly had a great run in the last, if you look at the stock price over the last year, it's not as exciting as it is if you look at the last 6 months or even 3 or 4 months. It's had a fantastic run here. What do you think the preeminent risk is for this business?
That there would be a softness in sales for the Model 3, and then overall a softness in all the vehicles. So the risk is that the public stops buying Teslas. But so far, demand has been extremely strong, and the delivery amounts have been really hampered by production and not by demand. And
well, let me push back on that. In the last 7 quarters, 4 of them have seen sequential declines in the revenues from vehicles sold. So it does seem that the Model S still selling, but you don't see, they sold fewer in the 4th quarter than they did in the 3rd quarter, for example.
I think the demand and the production is still strong, and I think there's still strong anticipation of the Model 3. The Model 3 will be the game changer for them because it moves them from somewhat of a niche high-end car maker to more of a mainstream car maker, and the number of Model 3s projected will significantly exceed those of the X and S together.
I think Michael, the jury's still out as to whether or not they can sell enough Model 3s to become profitable. And so up until now, they've been a luxury car. Going forward, the question is whether or not they can enter into the mass market, especially now that the big automobile makers in the longer term are going to be in this business big time also.
Yes,
well,
I do agree.
To that, they've lost. I'm sorry, Ivan. Yeah, they've lost money on every sale. If they have the same net margins for the Model 3 as they had for the Model S, Michael, I would suggest to you if they make more than one car, making a lot of cars is going to be bad news for them, not good news.
No, that math is not correct. They do not lose money on every car.
Well, sure they do.
If you look at it, it's not like the cars cost they sell for $80,000 and cost $84,000 to make. They have a gross margin of over 22%. So,
right, there's a gross margin, but it's not the operating margin. There are other expenses that go with making a car, like R&D, SG&A.
Yes,
I mean,
but that's capital investment. So they're not losing money on the sale of the cars. If you look at the gross margin on sales for the big automakers, for Ford and GM, is that they're trying to get to 10%. The gross margin on the publicly traded retailers like AutoNation is also about 10%. So you put that together, that's 20. Tesla is actually exceeding that because they are both the manufacturer and the retailer. So they have a gross margin on the sale of the car of 22%. The losses are coming from the capital investment that they're investing in the build-out of each model line, and now the Model 3, and the build-out of SolarCity's solar shingles.